This is Jody Tran with Chapter 4, Part 3 of Principles of Accounting. Let's talk about how to use the trial balance worksheet. The first step is to fill out all of your balances from your unadjusted general ledger accounts. Every account balance should be entered into these debit and credit columns, and you should ensure that your debits equal your credits. The second step is to enter all of your adjustments from your general journal where you've written your journal entries into the trial balance worksheet. You'll see that each one of these adjustments is labeled as A, B, C, D. That way they can be tracked if there's any question. These have come from our journal entries, so they should balance, but we also determine by adding up the debit and the credit column that they do indeed balance. The next step is to fill in your adjusted trial balance numbers. These numbers can come from two places. First of all, your general ledger accounts should have these amounts in them. You can just transfer those amounts over to your adjusted trial balance here. It's a good idea, however, to do a little bit of math on this worksheet in order to just test your general ledger account balances to make sure they're correct. You should be able to take your unadjusted trial balance numbers on this worksheet, add or subtract your adjustments, and come up with your new balance. Let's take accounts receivable as our first example. Our accounts receivable unadjusted trial balance was a debit of $1,000. We made an adjustment to it of $800 debit. A debit plus a debit equals a larger debit, and you can see that our adjusted trial balance equals the combination of these two numbers at $1,800. Now let's look at office supplies. Office supplies is right below accounts receivable. Our unadjusted trial balance was $500 debit. To that amount, we credited an adjustment of $400. That would reduce our office supply debit down to a $100 debit, which you can see in our adjusted trial balance debit column. Once you add up each one of these columns in your adjusted trial balance, they should balance to show that all of your accounts in your general ledger are in balance. The next step in completing a trial balance worksheet would be to create an income statement and balance sheet using the numbers that are on your worksheet. Notice that not all of the accounts transfer over to both the income statement and the balance sheet. Let's look at the income statement first. Remember that the income statement is to report net income. Net income is the sum of revenue minus expenses. So on this report, we only want to show revenue and expenses. You'll notice in this column, the income statement column, that we have transferred over our service revenue as a credit and all of the expenses as debits. None of these accounts will be transferred over to the balance sheet. The balance sheet only includes assets, liabilities, and equity. Remember that the accounting equation, assets equals liabilities plus equity, is the foundation for our balance sheet. Therefore, those are the only accounts that will show up on our balance sheet. Here we have a completed trial balance worksheet. Notice that all the account columns balance until we get to the income statement. The income statement doesn't balance because our revenue is greater than our expenses. This is a good thing. It shows our net income. Our balance sheet also doesn't balance because of this same feature, our net income. When we do our balance sheet report, we will take the $8,550 that's net income, and we'll put that into our equity area as a current year earnings account, and then our balance sheet will balance. Keep in mind that if we had had a net loss instead of a net income, then our credit side would have been lower than our debit side on the income statement. That would mean that instead of posting an $8,550 amount in the debit column as a net income, we would need to post a number in the credit column as a net loss. If we post a number in the credit column to make our income statement balance as a net loss, then we will also need to post a debit on the balance sheet. So your numbers will be exactly opposite in exact opposite columns as they are right now if you have a net loss. We're going to start with a brief review of the closing process. Instead of just listening, I'd like you to anticipate what the next close is going to be. Think about what the first step in the closing process is. The first step in the closing process is to close revenue into the income summary account. Remember, the income summary account is just a temporary account we only use to close out our revenues and expenses. The second step in the closing process is to close our expense accounts into our income summary. The third step is to close our net income or our net loss into our owner capital account. Our fourth step in the process is to close out our owner withdrawals into our owner capital account. At this final step in the process, all of our temporary accounts should have a zero balance, including the income summary account. Only the owner capital account, which is a permanent account, should have a balance. Here are the journal entries to close out our service revenue and our expense accounts. It is most proper to do a compound entry when you're closing out all of the expenses. Since our company's fiscal year matches the calendar year, the day that we use income summary is December 31. Here's a look at all the journal entries together. There are 4 sets of journal entries because there are 4 steps in the process. All the debits and credits will be like this, as you see here, unless we have a net loss. In the case of a net loss, the third adjustment, that is to income summary and bright capital, would be reversed. Remember, the purpose is to get a post-closing trial balance that has balances that you can carry over to start the new year. We'll have no revenue or expense accounts or owner's withdrawals to start January 1.